Mary Jane Matz is Director of Large Cap Value Strategies. She's a portfolio manager for all cap value strategies as well at Fifth Third Asset Management. The firm manages $17 billion in assets and owns just over 71,000 shares of Bank of America. MJ joins us now from her firm in Cleveland, Ohio. And MJ, great to have you here on Fast Forward. Certainly seems like to the broad investor community that today's announcement comes as a bit of a relief. The stock is up 3.3%. But what are your feelings on this?
Well, you know, it's always great to get that tail risk kind of curtailed so that you know the worst case scenario, and this portion of the exposure is really the hairiest, where Countrywide was the dealer, the issuer, the whole ball of wax. So this is the worst tranche of these mortgage-backed securities. But the number itself is fabulously more than management had indicated. It's double the low end of the range they put out there before, which was $7 billion. It was $7 to $10 billion, and if you add the $5.5 billion addition to reserves to that $8.5 billion settlement, you're at 14. They've indicated that there's another 5, that they're 0 to 5 billion that may in future quarters need to be charged off. You know, given that this estimate was so far off the management's guidance, you know, I think it's safe to assume that the $5 billion becomes $6 or $7 billion. So I'm not sure that the numbers themselves are good news. Yes, the uncertainty is lifted a bit. And I think you get good read through then to what the potential exposure is for JP Morgan or Wells Fargo. So I think it's actually better news there.
Let me ask you, MJ, the next steps in this. I mean, this settlement still needs court approval, which do you presume that's a foregone conclusion at this point?
I would at this point, given that they're dealing with one complete tranche of investor here, the first lien issued by Countrywide. I would, it's 2% of the original principal balance, so that seems, that would be above what they settled with Fannie Mae and Freddie Mac. So I wouldn't attach too high a probability that itself is overturned. But I think the important thing that happens here is book value and capital ratios take a big hit, and that puts Bank of America not at risk of the Basel III ratios, but really disadvantaged versus these other peers in terms of their ability to return capital with share buybacks, with dividends. It really puts that another couple years out.
Are you paring back your exposure at this point? At what point do you decide as a shareholder, and you have a large exposure, over 70,000 shares, when do you say the uncertainty is too much and you pare back the position?
Yeah, the shares you're quoting there are firm-wide, and I believe that they're held principally in our index funds. In our actively managed large cap value portfolios, we do not own Bank of America.
Let's talk about the state attorneys general. This is still an outstanding issue. Do you see more risk? What do you think happens in that situation?
Yeah, there's maybe $3 to $5 billion that could come back to Bank of America once that is completed. They have some reserves against that, so that's not going to be a new $3 to $5 billion, but some of it is not reserved for. So that's another issue that's still out there. This is a first step, this settlement, in kind of ring fencing this issue, but it doesn't completely make it go away.
You mentioned, MJ, JP Morgan, that this helps maybe let the dust settle for a number of other institutions. Do you have exposure to JP Morgan? What other banks also? I noticed JP Morgan is up a little more than 2% today. What other banks are going to be lifted by this news?
Right. Well, J.P. Morgan, Wells Fargo are two of the more obvious ones. J.P. Morgan is in our portfolio, and we do like that stock quite a bit. And just in a compare and contrast here to Bank of America, you're going to pay a little bit more on a price-to-book basis for J.P. Morgan, but you've got a tremendous advantage in terms of earnings visibility and in terms of the capital position that J.P. Morgan has versus the Bank of America. And as we said, with Bank of America, we're not yet done hitting capital for the private label mortgage pass-through business and the overall mortgage morass.
All right, well, stay tuned. Thank you so much, MJ. We do appreciate your insight. That was MJ Matz of Fifth Third Asset Management.